Well, hello, Maverick traders. This is Rob Reinhold, and this week I'm joined by Imre. It's always nice to have a new voice here, as Ankit is, he's out being very busy with a baby. Let's jump into the markets here. Last week, we had a big bounce off the bottom. Really, quite a big bounce, 5-6% in most equity markets. This broke 7 weeks of losses in the market. And we saw the worst hit stocks bounce the most. Now, that's typically what happens when you get these, we call them tradable bottoms, is that the things that got just absolutely crushed, they have the biggest bounces back. That doesn't mean they're the best, going forward for the next month or two. It just means that this is where all the pressure was, and this is where a lot of the shorting was. So we're going to continue to see this bounce off the bottom, most likely. We did hear from the RBNZ last week, and they raised rates by 50% or by 0.5% as expected. And they are definitely more hawkish, saying that there's more hikes to come. The Kiwi was the best performing currency last week. And boy, the cryptos got killed again. There is just no bottom to these. After going down, 10, 15, 20% last week in some of the currencies, they went down 20, 30% this week. It is really ugly right now out there in cryptos. So we do not like cryptos on the long side at all. We haven't liked them for 2 to 3 months on the long side, and just there's no reason to be in there, and there is reason to be short still. For economic reports, we got German PMI was up slightly, better than expected, and we did get the US PCE price index. This is the index that the Fed tells us that they care about the most. It came out as expected, but it's down from its high year over year that was set last month. So we topped out at like 6.8% and it came in about like 6.2%. So the question is, have we seen the peak of inflation? Imre, what do you think about that?
That's a really good question. It's literally like the multi-billion-dollar question. This is very anecdotal, but normally I don't read through earnings reports and earnings releases, but I did for Walmart because Walmart being such a massive retailer, they're kind of, and through their extremely sophisticated and international supply chain, they have a very good idea of what's going on with inflation from their standpoint as a retailer. And what was interesting that Walmart was talking about is that they see room to discount prices on certain products. And I believe specifically they were referring to larger appliances. Now, that's interesting because if we're in an inflationary environment that's still heating up, a retailer wouldn't really need to decrease prices, especially if the demand side is still holding up. So what that tells me is that they're seeing things in their supply chain that are telling them that production is starting to ramp back up or that demand is starting to fall slightly. So either way, it's very anecdotal, but given Walmart's position in the market, I thought that was an interesting tidbit to chew on. And then the PCE price index came out, and it was down from the higher year over year from the month prior. So that tells me that if inflation hasn't peaked, it's certainly slowing down. Now, I don't think that's going to apply to everything. For example, I would be shocked if we saw the end of oil price appreciation and gasoline appreciation as well. So I think on the energy side, there's still room for further price inflation. But in some of the other stuff, it is possible we've either peaked or we're coming close to a peak. What do you think, Rob?
I think we've peaked for sure, but that doesn't mean inflation's going to come down. I just think that we've seen the worst of it. All right, let's take a look at last week in the numbers here. So let's look at the numbers. The S&P up 5.9%, the world index, the VT up 4.7%. Crypto just is terrible. It just got killed again, and this is on top of another bad week the week before. Gold and oil really just kind of sat this one out. What I really want to do is look at the S&P chart and really talk about what is going on, because this was a messy bottom. I know that sounds kind of gross, but it's a messy bottom. A lot of times you get V-shaped bottoms, and sometimes you get W bottoms. W bottoms are messy. There's a lot of people get optimistic, people get pessimistic, lots of moves in here, and that's what we got here. So we put in a double bottom here. And this line right here is a very significant line. This is called the neckline. So whenever you get a double top or double bottom, this is the neckline. And what happens is it's a very crucial point. If this gets broken, it's basically saying this is a turning point. This is a turning point. Now, look, it doesn't mean that we're bullish and that everything's going to be great, but it definitely means we are no longer bearish. So the question is, where is this likely to go? I think we're likely to go up to the 50-period moving average. Now, I don't think we're going to get there this week. We had a big move off the bottom. I definitely think there's going to be some consolidation, but I think we work our way up to that level. What do you think, Imre?
So, Rob, I'm inclined to agree with you here. I think an interesting point, however, is if you look at the volume on the bottom, and like I'll be the first person to say that I think volume analysis can be inconsistent at the best of times, but there are a lot of people out there that dive deep into volume profiles and that kind of analysis. I'm not one of them. I know enough about volume and volume analysis to be dangerous. So the only thing that I noticed that was interesting on today's break is that if you look at bullish volume, it's a little bit lower than some of the previous days. So what that suggests to me, we're Friday heading into Memorial Day weekend. I wouldn't be shocked if we gave back today's gains in early to middle of next week, but I don't think it's going to be a particularly steep pullback, and I'm looking for something orderly in order to look for an opportunity to pick some up on the long side here. So I think if you're trading the ES or equity futures in any way, shape, or form, there is probably still some decent runway before we get a deeper pullback. But given the W nature of this bottom, I think it's going to be messy throughout the summer months. Like I think we're going to have some deeper pullbacks that are going to give people a little bit more fear or confirmation that we're still in a bear market. But I don't think we are anymore. That's just my personal hunch. It's my analysis, and I'm not afraid to stick my neck out on this one, but I think dips will now be bought going forwards.
We take a look at what happened in the Forex market. Last week, we really liked the Swiss franc and the euro on the long side, and you can see that they did pretty well. If we checked in on these on Wednesday, at one point the euro was up 2% on the week, and then it gave it all back Wednesday, Thursday, Friday. But euro still looking good, and that Swiss franc, we wanted to see if it could break out. It did perform very nicely. That being said, the Kiwi says, hold my beer, I got this, had a big run off of the RBNZ announcement. They raised 50 basis points, but they also came out a little bit more hawkish. So the Kiwi had a nice jump. And the dollar and the yen out of favor. They continue to be out of favor, and a risk-on move pretty much means that they are going to continue to stay out of favor. And then take a look at the CAD. The CAD has been very correlated to the dollar. So what happened to the CAD was most likely just from dollar weakness. And if we jump over to cryptos, you can see here it's a bloodbath again. After going down 30% last week, Solana said, I can go down another 22%. There is just no bottom to these. There's only selling, and there's no reason at all to be in there trying to buy these. Don't try to catch a falling knife. Let the knife hit the ground, and then you can safely pick it up. So let's take a look at the markets on the charts and the numbers here. We already looked at the S&P and we said we are no longer as bearish as we were. So we have to come up from this -2 up to like a -1 or a 0. The markets are just not that bearish right now. But let's take a look at the VT, the World Total Index. And you can see that the VT has a better pattern than the S&P does. We actually did not make a double bottom. We actually made a higher low, and now we're making higher highs. So world indexes are most likely going to outperform the S&P, which is bullish for those growth currencies. Very, very nice here on the breakout. If we go over to crypto land, it is just messy and ugly. We've been nothing but bearish ever since we broke down below this point back here in April. And even though we had this huge fall, this fall was really big, 30, 40, 50% for a lot of the coins. The fact that we could not bounce at all is very, very bearish. And you can see here on a day where the equity market was up big on Friday, this broke down. This is not good for cryptos. We are most likely going to see lower prices on cryptos going forward. On the schedule next week, we've got Australian GDP. Tuesday is going to be the first major announcement here, Tuesday night. Wednesday, we've got Bank of Canada rate statement. That's going to be a big one. They are projecting that there's going to be a 50 basis point hike. That's pretty much what all the central banks have been doing. Probably what we're going to get, but we need to hear what the Bank of Canada says about future rate hikes. That is going to determine what happens to the CAD. And then it's the first of the month, first week of the month. So we've got U.S. payrolls report on Friday. So we will be meeting live for that one, looking for a live trade there in that session. So this week, we've got U.S. markets are closed for Memorial Day. However, we also have all the other markets are open. There is going to be enough activity to where things do move, but understand that this week, the week really starts on Tuesday. That's when we're really going to see most of the volume. So be cautious that first day or two. I would say take some time off, go do something else than trade. Trading is going to be better Tuesday through Friday. We are going to be talking about the central banks and about the Bank of Canada. We're going to be meeting live on Tuesday to go over a preview of the Bank of Canada rate statement. And then again, Friday payrolls report, we're going to be trading that one live. So let's go ahead and jump into the currencies and let's just go one by one. We're going to start with the cryptos. And I'm going to go through these really quick because it's just bad. It's a -3 and a -3. Yep. You can't get any worse than that. -3 on trend, -3 on velocity. Now take a look at Bitcoin because Bitcoin actually looks, I can't say pretty good because it looks atrocious, but wait until we get to some of the other coins. Here's Bitcoin Cash, and you can see this one has got some real velocity going right now to the downside. And you take a look at Ethereum. Ethereum broke 4 days ago, and you can see lots of momentum on the downside, lots of velocity. And then here we have Litecoin. It had been holding up the best of all the coins and actually looked the best. It still looked terrible, but you can see it's breaking down, lots of velocity. Last week, Litecoin was at a -2, -2, but we've got to downgrade this to -3, -3. It's just so negative. Let's jump into our Forex side. Let's take a look first at the dollar. All right, now the dollar was holding on last week right here, right at the moving averages. And we said if we slip below that, then the dollar is a good sell. And sure enough, that's what happened. We slipped below it. And now we are trading below our 20-period moving average, below our 50. So we need to downgrade this even more. So we were at a +3, we went down to a +1. Now we're at a -2. This chart has absolutely confirmed that the dollar is now moving lower in a downtrend. However, the question is, do we have a lot of velocity? And the answer is no, we don't have a lot of velocity. Take a look at this. There is not a whole lot of velocity on this move. So where I think the dollar is going lower, I don't think it's going lower very fast. So I'm not sure dollar is a great trade here. What do you think, Imre?
All right, I think it's complicated because typically there are two kinds of corrections, right? We have price-based corrections and then we have time-based corrections. If we're dealing with not a real reversal in the dollar, but more of a time-based correction, then that's where you'll see those moving averages cross up and down several times. And it's messy and it's going to chop traders up. My view is that it is very possible that the dollar has put in a longer term top. That tracks with our view that equities could very well have put in a solid bottom here. That being said, if there's no velocity, it's not really tradable. And for a long time, I've been saying it's not a cross play. It's a dollar play. However, I don't know that the velocity is going to be there on the dollar side. It might be there on the yen side. It might be there potentially on the commodity currency side. So I'm starting to change my tune and say it's probably not a dollar play at this time. It's probably better to focus on the crosses and let the dollar do its thing. Let it sort itself out. And once the picture becomes more clear, then we can revisit that question. Is it a dollar play? Is it a cross play? But typically, when I'm looking at trading fiat currencies, that's one of the first questions I ask myself. Do I want to be looking at the dollar, or do I want to be looking at the crosses? And I'm always looking at the dollar, but I don't think this is an environment where you want to be trading the dollar necessarily, not until the velocity picks up meaningfully one way or the other.
I totally agree. And that brings me into the yen. Now, the yen, you can see, is still holding on to its trend. It is above the 50, it's below the 20, but you can see it's right there sandwiched in between them. And we've got this support level here. So when you take a look at yen, you say, okay, well, the trend score is basically a 0. It's weakened from +1 to a 0. But when we get into the velocity score, all of a sudden, we see that the yen likely has a lot more downside velocity than the dollar does. And so we're liking the yen very short term, at least as far as the first part of next week, as likely to be the currency that has the most downward velocity. Coming over here to the Swiss franc, we liked the Swiss franc back here. The SNB President Jordan came out and said that they are going to be aggressive in raising rates. It made a big jump, went from below the moving averages to above within 2 days. And the question we had last week was, is there follow through? And I said, if we break above this point, you want to be long Swiss franc. And it was a nice trade. And you can see we're just basing again up here. The Swiss franc is looking really good, so it moves up to a +3 on the trend score. And the velocity right now, we are moving up, but it is a base. It is a base. Once this base breaks, it is another buy for Swiss franc. Moving on to the euro here. The euro is kind of in no man's land. If you take a look at it, it's technically still maybe going higher on the trend. We've got general upward movement, but it's just not fast. And when you come down to the velocity score, you say, oh my gosh, what is the reason? There is no movement here. And look, there can be no movement on the velocity score, but you look up to the trend score and you say, oh, okay, well, there's about to be this move here. You cannot see any potential move here. There is no good technicals telling you which way it's going to go. So for me, the euro is just a no trade. Just a absolutely no trade. And frankly, we're starting to get a little bit more of a push down here at the end of this week. So for me, euro is just going to go on the shelf. I'm not going to trade it. And pretty much the same thing is going to happen for the pound as well. So the pound is just at a 0. It's right in the middle. It's literally right at moving averages. No one here can tell me whether technically this is a buy or a sell until it does one of the other. So the pound is on the shelf, and you can see nothing going on velocity. Now remember, we only want to be trading the currencies that have energy. And when they don't have energy, just put them on the shelf and then check on them in a week and see if they have figured out where they're going. So no reason at all to trade the pound. Now on to the Canadian dollar. This is a big week for the Canadian dollar. As we said earlier, we're seeing a big correlation between the dollar and the CAD, stronger than normal. And so we saw the CAD follow the dollar on the way up, and it's simply following it on the way down. At this point, there really is no reason to trade the CAD. You should just trade the dollar. They're moving together. The question is, when the Bank of Canada comes out with their rate statement on Wednesday, will this break away from that? Will it break away from that correlation with dollar and trade on its own? And if it does, then the CAD is tradable. And you can see, depending on what happens, if there's a move lower in CAD, I think you want to be looking to be short CAD after that announcement. So we've seen weakening in the trend, and we see that we are basing here at the bottom. So we need to see a breakdown. But if we do get a breakdown, then I think the CAD is absolutely shortable.
Yeah, I spoke about this in the currency recap the other day. So goes the US dollar relative to the other currency regimes. Kind of that shine or the lack of shine will rub off on the CAD likely one way or the other as well. The other day, oil had like a 3% move and the CAD held its own. So I do think there are external commodity factors that could lift the CAD still above the US dollar on a relative basis. But my hunch here is that after a period of relative outperformance against its commodity currency peers, I'm actually liking the Aussie and the Kiwi more now than the CAD if we're looking at commodity currencies. So that would be my preference. And for traders that are less comfortable with volatility for whatever reason, if you wanted to pair two commodity currencies against one another, which personally, that's not my jam. I like volatility, so I might not necessarily look for this kind of trade. But Aussie Canada or Kiwi Canada might be easier to carry than for example, an Aussie yen or Aussie dollar play.
Let's go next to the Aussie dollar. The Aussie dollar was at a -2, and it gets quite a bump up today. So we've recovered back up above the 20-period moving average. We're at the 50. So look, this isn't bullish yet. And take a look at this big area of resistance. This is a major, major resistance area. If we can break above that, I will go to a +2 on the Aussie dollar, and it will absolutely be a tradable currency. But it needs to break out of this level. Velocity right now, not a whole lot going on. So a break early next week, Aussie is on the table for a trade. And lastly, Kiwi. Kiwi was the best performing currency, and you can see the Kiwi has already done what we are asking the Aussie to do before we trade it. It's already broken. It's already broken above its 50 moving average. It's already broken this last bit of resistance, and it looks even better because we bottomed out in early May, and we've been making higher lows ever since. This is a really nice start of a trend. We have no idea how long this trend is going to last. It could be over already, but we're going to play this like it's going to last. So we are absolutely upgrading the Kiwi all the way to +3, +2, and +3. This is the strongest currency out there. So let's take a look at the trend scores here. Now this is where we were last week. So last week we had no real strong trends going anywhere, and we did have some trends on the downside. But let's take Litecoin was holding up at a -2. It's fallen to a -3. And the yen has weakened a bit. The dollar has weakened quite a bit, 3 spots. The Swiss franc has showed us that it wants to play. It does want to go higher, at least at the short term here. The pound has just gone to the middle to where we're no longer interested in it. The CAD has followed the dollar lower. And you can see the big jumps. The Aussie and Kiwi improved substantially. So all of a sudden, we're looking at Kiwi Swiss franc as the strongest currencies. That's kind of an odd combination. If we go to the velocity score, this is where we were last week. The cryptos have all fallen down to -3. As you can see, the dollar has weakened substantially with velocity. The yen has weakened a little bit. Swiss franc showed us that it does want to go higher. Euro has fallen back down. Pound has fallen down. So right now, when we take a look at where we are, what is showing velocity right here, right now, you've got Aussie, Kiwi, and Swiss franc all together. Now that is a very odd combination. Imre, have you ever seen that before?
I actually can't. I mean, the Swiss franc is a very weird currency for me, and it's probably the currency that I trade the least frequently because it doesn't move a lot, but when it does, I mean, wow, the moves both to the upside and the downside are pretty incredible. But yeah, this particular situation is pretty unusual, and I don't think it's going to last for what it's worth.
Yeah, I agree. I think one of those is going to have to fail. They're just too negatively correlated. Let's check out the full currency board, and you can see that the bullish trades are basically Aussie, Kiwi, and the Swiss franc. Bearish trades, dollar and yen, and cryptos are atrocious. They look terrible. Don't try to buy them. And if you want to go short them, go short them. Just realize whenever something's had a really big fall, there's a big potential for a really big rally. We saw that in the equity markets this week. So be careful out there on cryptos. So let's take a look at a couple potential trades out here. So my favorite pairing, the Kiwi was the highest score on the upside. And while the dollar was great on a trend, to me, the yen had the most potential to the downside. Here is the Kiwi Yen chart. And if you take a look at it, we've got a really nice pattern forming here. So we had some resistance here that we have cleared out of, but take a look at what's been happening. We've been getting some higher lows all the way from the bottom. We've been in this ascending triangle pattern for well over 2 to 3 weeks, and it's breaking out to the upside. So the question is, okay, where is the next level? Where's the next level of resistance? And it's really all the way up here around 83.60, 83.70. That's a lot of ground that it can go. And if you even want to go up to possibly 84.70, there's a lot of space in here to go. Imre, what do you think about Kiwi Yen?
Love it. I mean, absolutely love it to the upside. I would say arguably, I was trying to decide Aussie Yen or Kiwi Yen. So I was long Kiwi Yen last night, and I'm probably going to pick an exit before the market closed. But I really like both of these, Aussie Yen and Kiwi Yen. Kiwi Yen to 84.50, I think is as clear a target as you can get. It's just a prior swing point. I don't think you should feel like you need to rush into this trade. However, if you're not on board, it's okay to wait. It's okay to wait for a pullback. And if you don't get a pullback and you miss the trade, guess what? That's okay too. It's not a big deal. It's not the end of the world to miss a trade. There's always going to be another opportunity around the corner. So I just want to stress, if you're looking at these charts, you're seeing the breakouts and you're getting all excited, and you feel like the train might leave the station without you on board, just make sure that you go back to your trading plan and ensure that you're picking an entry and a stop and a position size that suits your plan or is 100% in accordance with your plan. I've had quite a few coaching calls this week with traders asking, how do I catch a running train? And the answer is you don't. You wait for it to slow down and come to the next stop. And if it doesn't, so be it. There's going to be another trade. But I love Kiwi Yen. I think it's very similar setup in Aussie Yen as well.
The only other chart I wanted to take a look at is dollar Swiss franc. Now, the reason I wanted to talk about this one is that the Kiwi Yen, Aussie Yen trade is going to be highly correlated to equity markets. If we sell off next week in equity markets, that is going to negatively affect those currency crosses. If you don't want to have that force attached to your trade to where you don't have to worry about what the equity market does, this is the pair that you can absolutely trade. They are negatively correlated. Swiss franc is going higher, dollar's going lower. But if the market crashes next week, it's not really going to affect this pair. And if the market takes off next week, it's not really going to affect this pair either. So as you can see here, we've got a nice low base here forming. And the question is, where's the entry point? If this was happening right here, right now, I would likely already be short off this one. The fact that we have to wait the weekend, maybe we don't even trade on Monday, I think you've got to come back on Monday and really check and see, okay, where is this going? And then Tuesday, when the volume really kicks back in, is this at a good place? Because I think you can absolutely sell dollar Swiss franc. Are there any other pairs you want to take a look at, Emery?
I think, not right this second. I think as we get into next week and we digest some of the price action, the Canadian dollar might definitely be worth a look. I think Canada Yen and Dollar Canada might be two interesting pairs to be looking at, depending on how the action plays out on Wednesday. And speaking of Wednesday and central bank decisions, this is a general rule of thumb here. Do not read in too much into what the actual news event is. All right, markets will go up on bad news and they'll go down on seemingly good news. And it's always easier said than done in hindsight to be able to look at the action and say, well, it was already priced in. The fact is, you don't know at the moment in time whether or not the news is priced in. So just because the Bank of Canada does what it's expected doesn't mean the currency is going to rally hard, doesn't mean it's going to fall hard. Keep an eye on the price action, wait for the news event to give you that burst of volatility, and then make a decision according to your trading plan. So I think the Canadian dollar is worth a very good look next week. But heading into Tuesdays, I'd want to see what Monday and Tuesday brings first.
And Emery, I actually learned that lesson up in Canada. I was this is probably in like 2004, 2005. and there was no CNBC on in my hotel room. And by the way, Canada, you have the worst TV. It's just not very good. Would you agree with that? Maybe it's better now.
I permanently run a VPN so that all my streaming services think I'm in the US.
Okay, then you still have bad TV. But anyway, I always had the TV on when I was trading the US payrolls report. And I couldn't have it on my TV. And I'm like, what am I going to do? I'm not going to be able to see the numbers. I'm not going to be able to hear the commentary. And I just had my laptop there, and I just had to trade off of the price action. And I made a really nice trade, made some money, closed it up, went and met my friends for the rest of the day, and realized at the end of the day, I didn't know what the actual numbers were of payrolls. And I just realized I don't ever need to know the actual news. And so for the next couple of years, I deliberately would turn off the TV anytime I was trading a news report because I didn't want to get that stimulus. I didn't want to get all those suggestions that would bring. So Imre is exactly right. We have no idea what's going to happen with the Bank of Canada news. We're just going to look at the price action and make a trade off of it. Let's wrap this up. We do think it's a continued risk on move. We like the Kiwi, we like the Aussie, and sort of like the Swiss franc. Wednesday, big news. So on Tuesday, we're going to be meeting and we're going to be talking about a preview of the Bank of Canada rate statement. Now, this is something we're going to start doing different. And we've been doing these online courses for 15 years. And for 15 years, we've pretty much made an online class so we could make a video. That's really how it's been. We show up live and we'll record it, and then we'll really just put it in the video library for anyone to watch whenever they want. And so we've been doing lots of educational classes. Things have changed, and the way we do things have changed. So this is going to be one of the changes you're going to see, is that we are no longer going to be doing live educational sessions. We're going to be doing either live trading sessions or very topical things. So as you can see this week, we are going to be meeting on Tuesday, the day before, and we're going to talk about the Bank of Canada. We're going to look at some currency crosses that we're going to be watching and talk about the possible scenarios that could happen off of the rate statement. Wednesday, we meet for a midweek update as usual. Corey will take you through that. And again, we'll be able to talk about what happened to the Canadian dollar because that will be after the announcement. On Thursday, we're going to do a preview of the US payroll. And then on Friday morning, as usual, we are going to be meeting live where we trade the US payrolls report. Everyone in the US, have a very, very good weekend. Be safe out there, Memorial Day. All of you in Canada, you had a good weekend last weekend, hopefully. Is it Victoria Day? Is that what it's called?
Yeah, yep, Victoria Day.
So here's kind of the thing that stinks, though, is that up in Canada, if you're a trader, you're still trading that day. And in the US, if you're a trader, you actually take that day off. That is kind of the irony, isn't it?
You know, I mean, I work purely based off the American holiday calendar, and it's, it is what it is. You know, I mean, if you want to trade, I trade the TSX as well occasionally, which is the Toronto Stock Exchange. You know, so I wasn't trading that on the Monday, but yeah, I mean, otherwise, you know, just enjoy the time off. I say this all the time. Not every day has to be a trading day. Not every week even is a trading week. And I think as the more, you know, it is the irony in that when you're first starting out as a trader, you just want to be trading all the time. And I think as you get the years under your belt, as you've seen more and more, you start appreciating the times when the market's closed all the more. So I love it when the market's closed personally.
Well, thank you so much for joining me, Imre. It was great to have you on. Everyone have a great weekend. See you later. Goodbye.